We are good to go.
So is that just you hit the button and everyone comes? Is that the chat?
Yeah, we have some attendees. Welcome everybody. There's a little chat box here, so say hey if you want to say hey. Otherwise, sit quietly and enjoy the show.
Good. Cool. So for those who will know, well, probably on this mug that you see, probably with this background a little bit on our website. So I'm obviously Adam Thompson. Started my mortgage 10 odd years ago. Been a mortgage broker for nearly 15 years. Yeah, don't love having big mortgages. So whole point of this chat tonight is about repaying your mortgage faster and just some tips we've got around doing that. So I'll let Amber introduce herself and we'll get underway.
Cool. Hey everybody, I'm Amber. I have been part of the My Mortgage family for a few years now, and have recently taken the leap, jumped out under Adam's wing, and became an advisor this year. So you might hear from Adam and myself. We work as a team a lot. So yeah, I'm going to let Adam run things this evening, and you might hear from me a bit later on.
Oh, good. Good. Okay, so as a start, am I lined up here correctly? You can see me. Good, easy peasy. Cool. So Amber's going to run a bit of a PowerPoint we've got together, and we're just going to cover through that, some basic bullet points. Really encourage interaction here. The chat box is a great way for us to see if you've got any questions and stuff to come up, because you'll get sick of me just talking verbatim the whole time. It really is a discussion about money and budgeting, so it can be a little bit one-dimensional if you don't pop up and say something. But hey, we're here to help, so that's cool. So title tonight is Smashing Your Mortgage. So bam, that's what we're about. So we're going to cover off a few different topics today. So key things, budget tools. So those people who know me, have talked to me, who are my clients, will understand that I'm always pumping on about budgets. We're going to have a look at basically, different tools and stuff we've got. We'll look at loan structures. We'll look at what you can do from a lender's point of view, as in, is refinancing going to give you some better options? And then we're going to look at some goal setting. So pretty simple. We're probably going to be here for about half an hour tonight, team, but obviously as long as you want in terms of asking questions and follow-ups as well. So come at us. So budgeting, a few different things. So this is my absolute favorite thing, and there is no sort of there's no silver bullet really in terms of smashing a mortgage and repaying it quicker. Budgeting is the absolute number one thing that you can do to pay your mortgage off faster. Why is that? So it's about finding money that you're losing and then putting that money into the mortgage. We will have all heard the saying that you can't manage what you don't measure, and if you're not measuring where your money's going, you can't manage the outcomes that you're getting. So yeah, that's the real big thing, guys. Like is having a budget and finding out those things. So there are a number of different tools. One thing that we're really big on is a company, Pocket Smith. They're a Kiwi company. It costs about $10 a month, and they run this really cool budgeting software. It's a lot like Xero for people who have used Xero with business. It pulls in your bank feeds, you categorize your spending, and then you get a bit of a metric on, cool, this is what I have been spending my money on. It's amazing. We do this as a part of loan applications, and we can say, hey, cool, you spend $180 a month on fast food. We have to tell the bank that, but you might learn that and go, maybe if I make my lunch, I can save a bit of money. So that's a really big thing. The other thing, talking about short-term debts. So if you can consolidate any what we call short-term debts, so credit cards, hire purchases, maybe you've bought things on interest-free, but that's run over and now you're paying a high interest rate. You can reduce your cost of outgoings for still having the same amount of money owed, and then obviously pay that off faster by consolidating them. So that's going to allow you to once again find some money that you can redeploy elsewhere for better gains. So being aware, so awareness, really big thing. It's that you can't manage what you don't measure thing. If you think that you've always got money in the bank, so you don't need to worry about it, that's yeah, it's amazing what you can lose in that sort of situation. So The common thing that I get from people say to me, Adam, I make plenty of money. I don't need a budget. It's not a problem. So yeah, that's something that it's not true. So cool. On to the next slide here. I can't point my finger at my screen. It's not going to tell you anything. This is a bit of a dummy account structure. So it's about keeping things simple. And here's an account structure that I recommend to a lot of clients, especially people going out and buying their first home, and they're getting started and they're getting set up. This here is a really good way of just keeping things simple. You can add other accounts in around it, but the premise here is that you have all of your household bills that you possibly can paid on automatic payment and budgeted. I know you get some variables in terms of things like power, but obviously your mortgage, your insurance, those sorts of things can all be automatic payments, come out of an online account, so that you basically have your clearing account, which I've listed at the top, your wages account there. All your money comes into that. Automatic payments come out and go into your bills account, so you know that those bills are all paid. On payday they're paid, which is just number one. Regardless of whether you're making $300,000 a year or $30,000 a year, it's still relevant. The size of your bills might be bigger, but therefore so is the size of your potential gains. So that's a really good tool, is having everything in that one account. It's a way that you can track where those things are going, school fees, all those extra bits. They're paid for on payday, sorted. You don't get an insurance bill in the mail once a year and go, oh shit, how am I going to pay it? You can just basically get on and get it sorted. So then in the middle column there, we talk about having a household spending account. So obviously groceries are going to be variable week to week, depending on what you've got in the cupboard and what you need to do, fuel and those sorts of things. So they're the must-haves. By managing your budget, by looking back at what you have spent, like I say, using a tool like PocketSmith, or simply just going through your own bank statements, you can work out what your average costs per month are on those things, or per fortnight, or whatever it might be for your pay cycle. You can put that money into that account, and then you pull out that card and use it when it's there. Then, of course, and I say this to everyone, it's important that you can do the things you love. For me, that's buying a new squash racket, or something like that. For other people, it's getting a nice haircut, not the problem that I have. But you need to be able to spend your money, and it's your fun money. It doesn't matter whether that's $20 a week or $200 a week or whatever it is. If you've budgeted that money aside, you just don't feel bad about it, And if that's going down to the pub on a Friday with your mates and know you can shout around because you've got that money in your budget, that's really cool, But none of this happens if you don't take action on it. And it's all about fitting into a wider plan, and that's why we'll talk about financial goals a little bit later on. Bear with me, I'm just going to have a drink. Cool. So loan structures, great. So this is something we won't go over in a heap of detail because they actually they differ for everyone really. Now, revolving credits and offset accounts are really good ways of getting ahead, because you can store money and offset your interest cost. But they can be tricky, and there's actually a really good blog on our website. Amber, could you pull that up in our blogs and maybe show everyone at some point here? Worth reading if you're looking at a revolving credit account, because that basically the banks, the way that they want it to set it up for you is often so that all your money's going into one account, and they say spend it on the credit card and pay it off at the end of the month. In reality, it takes you a little bit out of control about of your money. So if you go into our blog page and just search revolving credit, you'll come up with this blog that I wrote a few years ago, which is basically just all about how you can use that revolving credit to your advantage by basically getting to the end of the month and using all your surplus cash to just pay off principal. So here it is here, up on screen at the moment. You can jump on there and read that at your leisure, but it's a really valuable tool. And they're not for everyone. You have to be really disciplined with your money, because you're going to wind up building a buffer in your revolving credit, and that money's going to be there for you to spend. But if you spend it, it's not paid off your mortgage. So some people struggle with that, and we don't recommend revolving credits for them. But it's a really valuable tool if you can harness it and use it well. Fundamentally, I don't agree with the way that the banks try and present to get you to use them. But hey, it's about the right thing for the right people. Floating lending, really interesting. How do you make your money is a really interesting question. You know, so I've been doing this for 15 years, and the amount of different ways people are paid. Whether you're just paid a fixed salary, you're paid a salary plus a bonus. We have people who earn, say, piece rates, especially things like, say, you're picking fruit, or people ride horses or track work and that sort of thing. They get paid for the more work they do. So, and that can be seasonal. So having a bit of lending on floating will actually allow you to go, hey, we've got a surplus because it's the summer and I make more money in the summer, and then just dump that off on the mortgage. So that's a really good option in terms of structures that can help you to get ahead. And there's a bit of a part of your overall, you know, and I think just to set and forget one loan doesn't work for everyone, but it has its place, you know. So yeah, mention here about fixed loans. So you can actually increase your repayments on most fixed loans with most providers without penalty. So they'll offer you some ability to pay the lump sum or to increase your payments. So it's not enough to sit there and go, oh, next year we're going to pay the mortgage off, or we're going to pay a bit more off. If you've got a pay rise, you've got some extra money, it's an opportunity to go, hey, cool, I'll pay an extra $50 a fortnight off the mortgage. Especially those little extra wins that you didn't expect can just get you ahead a lot faster. So this is not rocket science, and I keep saying it. It's not like some magical solution I'm giving you. I'm not. It's just not the way it is. These are just the aggregation of marginal gains. You know, if you can make a little bit here, pay a bit off, it's less interest you have to pay next year. Talk about fixed rates, and obviously, yeah, most important, fixed rates are the cheapest, and that's going to, you know, reduce your overall cost of borrowing. But that doesn't mean you have to have everything on fixed. You can have a mix of fixed, floating, revolving, offset, whatever's going to work for you. Most commonly, for those people who really apply themselves to reducing debt, a combination of fixed and floating or revolving is going to be the right balance for them. And it might be that 90% of their lending is fixed, but yeah, having the flexibility to repay extra can be really helpful. So, yep, loan structure is huge, and we spend a lot of our time as mortgage advisors, and we're more than willing to give as much of it to you guys or any family and friends about helping you with those sorts of things. That's our job. So.
Cool. I'm just going to jump in here too and explain this next slide. You can't see me, but that's okay. So basically this one here is sort of saying if you find yourself with a little bit extra money, so maybe you've got a pay rise or or bonus, commission, those kinds of things, or you've been doing some different work, part-time stuff on the side. Maybe you want to increase your repayments on your loan. So just looking at a bit of an example of how this will help you to smash your mortgage a little bit faster. Just so looking at a number, so a 500K loan over a 25-year term, standard rate, we're assuming that the rate's going to stay at 3% the whole time of the mortgage. Obviously, in reality, this can change a little bit, but for the sake of this, we're going to look at it like that. Based on this, the minimum repayments per month are going to be sitting at that about $2,300 a month. If you suddenly had an extra $1,000 a month and you wanted to put that on, over the course of your lending, you'd be saving over 85K in interest. And so assuming that interest rate stays the same could take nearly 10 years off your lending. So this is quite a clear example. What we have got is a pretty cool tool. I'm going to reshare my screen. Over on Loan Market, who we work closely with, there is a calculator that says extra mortgage repayment. So you can have a look at this just by Googling extra mortgage repayments. And yeah, this is going to tell you what you can save. So there's an option here. You can type in what your loan amount is. So same figure, let's go 500,000, the loan term, the interest rate, and you can also put in here if it's fixed or variable. So at the moment, we're looking at it variable and saying that that's what it's going to be over the whole loan. If we did fixed, we can look at what the base of this floating rate is at the moment. So say it's around 4.5% and the fixed rate is 3%, and we're fixing for 3 years. That's going to tell us over that term. But if we stay with this one, just looking at it as a whole, if we assume 3% over the whole loan, repayments monthly And then down here, you can pick how much extra you might want to contribute per payment. So you can set it as low as high as you like. And you can also look at it, say after you fix for the first couple of years, you're getting started, it's your first home, you're getting on your feet. And then after the first year, you're in a good job, you're stable, you feel like you can put a bit more into your mortgage. You might want to say, cool, I'm going to start those repayments after 2 years. But if we did it right from the start, extra $100 over the term of your loan, it's going to save you about 11 grand in interest. But what I think is the awesome part in this one is actually the time saved. So you're going to knock off your loan all my curses here. You're going to knock off your loan about 1 year, 3 months faster.
Just for $100.
Yeah, for $100 a week, which is pretty awesome. So, gonna remember this tool. This tool is here. You've got heaps of. You can pull down, have a look, see where you're kind of saving that money, and just play around with it. Everything you change is going to change these figures at the bottom. But yeah, so.
And the other thing to consider there is like the more you pay off, the easier it becomes to pay off more because you're paying less interest. So this is something else I wrote a blog on a few years ago, is the power of compounding interest. And we talk about, like, investors talk about compounding interest because it's interest earned on top of interest, earned on top of interest. Well, that's what the banks get from you. But if you can pay money off, it means you pay less interest and it becomes easier to pay more and more principal. So yeah, it's ways that you can, every little bit helps, which is cool. Next, refinancing. Sweet. So what's the name of that tool? What is the name of that tool, Amber?
Loan Market.
And it's called
it's on Loan Market Extra Mortgage Repayments. Extra repayment saver.
And that graph's quite cool because you can see the shading that increases in terms of the quicker payoff of the mortgage, which is awesome. So cool. So refinancing and the best deal. Now, like, this is one of the easiest ways to find money. I did a video recently talking about lazy loans. People have got a lot of loans, or they've had a loan roll into floating and they're just paying extra on it, or they're paying their bank an extra 0.2% because they sent a letter in the mail and they offered them something and they just took it. If you've got lazy loans, if you've got a loan structure that you haven't given some attention for a while, restructuring your lending and potentially refinancing away from your lender to get a better deal at another lender can be a massive saving. Not only is it going to give you some cash back up front, give you a chunk to get in, but it's going to allow you to make sure you've got the best deal for you. So is your existing bank giving you the best deal in your existing loan? Look, there's no way to tell for sure. We review these generally year on year for our clients, or at any fixed rate review point. So if you haven't had a review of your loan for a few years, or you're going to chat to someone at a barbecue and they're like, oh man, I get ahead, and it's like, just get a review of your loan. It's like the easiest thing in the world. We've done it a million times. We can look at your lending, and often in like 10 or 15 minutes, we can be like, cool, if we change this around here and we package these together, and this bank will like that product, and they were like, cool, we can save you $1,000 a year. And it's like, well, shit, $1,000 a year. Well, it's twice what Amber was talking about earlier in terms of those extra payments, and that's for zero effort whatsoever. So it's worthwhile doing. The other thing is, like, all the lenders offer different products. So some lenders actually have like certain types of ways of doing offsets, or certain ways of extra payments, or certain types of rates, or they want certain types of clients. And you don't always know that because, you might just bank with the same bank you banked with for your whole life, or the whole time you've had your mortgage. Is there a better product there for you and a better way of doing things? So you might love the color of your bank's logo, or you might love the lady at your branch, but like, if they're not the right fit for you, and this is probably the single biggest cost coming out of your household, look, best to do it right. So yeah, we'd love to help with that stuff. The other consideration, along with refinancing, is can you top up your lending and pay off some debt? So a real simple one here is, you've got a car loan and you're paying 12.5% on it. Well, if we consolidate that onto your mortgage, you're only going to pay 2.5% on it. we can still repay it over the same amount of time, or you keep your payments the same and repay it quicker because you're going to have less of an interest cost. So, but it's just, yeah, it's sort of a no-brainer. Why pay high interest if you can put it on the mortgage? Especially like, you know, people have owned property in the last few years, their property's gone up in value. They may not have been able to do this and they've had to borrow money, you know, vehicle loans or unsecured debt and pay high interest rates. Well, now's a really good time to consolidate them because you'll have a bit more equity and ability to do it. So it's going to put you in a better position. It's going to get that debt repaid quicker. And that's always got to be good for you, you know, so. The other option is breaking and refixing. So if you're still on high rates, I know like a lot of people have fixed 3 or 5 years a few years ago, still have a year or two to go and are kind of going, you know, everyone's getting these rates in the 2s and I'm still at 4 or whatever it might be. You might find that actually paying that break fee up front is going to get you some savings over time. And Amber, I think of the deal we had for the chap in Auckland recently, $23,000 or something stupid for a break fee, but he was going to be like $6,000 better off to do it. So he ended up topping up the mortgage and he borrowed an extra $23,000 to pay the break fee. But over the next like 18 months, he was going to wind up being thousands of dollars actually better off. So you don't know if you don't ask the question. And I guess what we're saying is like, we're here to ask a question. It costs you nothing to ask us a question. Yeah, tell your friends we're here to help, basically. So yeah, a few little simple things there in terms of refinancing just to get a better deal that can help you. So. Financial goals. So this is huge, guys. Like this is sort of the rounding out piece. The budget on one end and the goals on the other are the key things around helping you to stash your mortgage and reduce that debt. So where are you going with your life? Now, a lot of people don't know this, you know, like, geez, I'm 35. You asked me 10 years ago, I had no idea where my life was going. I asked some people who are 55 and they still don't know. But like, it's just about saying, hey, cool, these are the things I want in my life, you know. I talk to some people and they're like, cool, I just want to have enough money to go on holiday with my family once a year. You know, I'm like, cool, okay, what's that going to cost you? And they're like, it's going to cost me $4,000. Great. That's a part of your financial goal. We need to work it into your budget. So you can see how your goals set your budgets. Other people say, hey, Adam, I want to have $100,000 a year in rental income and I want to be debt free by the time I'm 55. It's like, cool, we can work that plan in as well. They're just numbers. And that's the awesome thing is that we can just sort of go, cool, you know, where do you want to be? Let's quantify how long it's going to take you to get there. And then it's like, cool, this is what you're going to need to do to get there. And then you can decide, cool, am I willing to do that? You know, I might need to find another $50 a week. I might need to give up drinking or, you know, gambling or whatever it is, and just plow some extra money into the mortgage. But the cool thing is that me and Amber and our team of advisors, we can help you basically to quantify what those goals are. So setting goals is really important. Term of the loan's huge, you know, like whether we like it or not, we're going to get to a point in our lives where we can't work anymore, or we don't want to work anymore, you know. Yep, cool, it might not be 65 anymore, it might be 70. But if you're sitting there at 50 and you've still got 25 years to go on your mortgage, you've kind of got to go, cool, well, I actually want to have that repaid a bit quicker. What do I need to do? So we can help with that in terms of your term of your loan. So for a lot of people, that often involves, cool, if you've got some good equity, buying an additional property, buying an investment property, because that's going to help to increase your cash flow over time. We find especially people who have they've paid their mortgage off and they might be in their 50s. There's no point putting that money in the bank and getting less than 1% for it. It's like, cool, if you put it into a property, you're getting say a 5% return plus perhaps some capital growth. You know, so a lot of people tend to go along that line. There's ways of doing it. Talk about selling and buying or building, renovating, those things that you can do to perhaps improve your position, improve your equity position. And we talk about, you know, you start in your first home and then you build up. And so you can trade up. And then at the other end, you start trading down because you're only going to need a small home when you're older and so you just buy yourselves. So it's about looking at how those things fit into your goals as well. And really, it truly is a unique thing. You know, say in 15 years of setting financial plans for people, everyone's personal situation is different. But the key thing is like, Like, no question is a stupid question, and we're here to help. If you say, hey, I want to do something, can you help me with it? We are like, that's our superpower. We are there to basically help make these things happen and to quantify to show you how it can happen, you know. So yeah, so that's pretty much a quick summary on tonight, guys. I know we sort of rushed through it. We've got some links here as well, which we'll share, and we'll share these things on our Facebook page, and so you can watch back over. I know I'm a quick talker, and we sort of brush over things. Fully encourage any questions. We've probably only got a minute or two to go, so if you do have any questions, just fire them up in the chat box now. And we'll have a blog. I don't think it's live yet, actually, but I recorded a video talking about, it's this funny graph that I draw, and it's hard for me to kind of explain, but I don't think it's live yet, but it's basically saying that, like, you start off and things are tight, you know, like when you get into your first home, you don't make a crazy amount of money, and you basically, yeah, it gets easier over time. Your property goes up in value, so you have more equity that you can leverage off. And the quicker you can repay that debt, the quicker you get that equity, but also your income increases over time. So yeah, if people are out there and they're like, oh man, I've been in a house for a couple of years, it's tough. It's like, yeah, cool, it's going to get easier. You know, like if you stick with it, you make some goals to help to progress in paying debt down, it can really help. So now I think Amber just brought something up there, calculators. We've got like we've got a bunch of calculators on our website, and Amber will have a bit of a chat about them, about what they can do.
Cool. So just showing you, basically just on our website, we've got heaps of blogs. So up on the top page, really easy to find and really easy to kind of look what you try and search what you're looking for. So we've got categories that you can search through. You can search your blog like I did for the revolving credit before, first time buying. There's actually a section on pay your mortgage off faster, which is awesome, and it brings up everything we've done. So there's heaps of videos, there's blogs, heaps and heaps of resources. So have a scroll. If there's something that you want to ask questions on, we're always here to help. And then the other thing is we also have a number of calculators. So this one here, this main one, is how long something will take. So again, looking at that $500,000 loan at a 3%, how much your repayments are going to be. And you can play around here with the interest rates and the term and also the amount to kind of see how that changes. And then we've got a number of others. So savings from break fees. If you've got the break fees, you have to know what that is. Then you can enter some details in there. If you get in touch with us, we can run through this with you as well, kind of explain it every step of the way. And then we also have a couple of other really cool tools around interest-only repayments and in buying an investment property. So do have a look around. If you do have questions, we're always here to help. Flick any of us an email. Yeah.
That's simple. Cool, guys. Okay, cool. So no questions firing through on the chat there at the moment. So yeah, you can get us. I'm just Adam at mymortgage.co.nz. Amber is Amber at mymortgage.co.nz. Yeah, cool. Flick us an email. We'll basically post some more stuff up on our Facebook page. A few of the supporting things we had through tonight. Keep an eye on that new blog that I was just talking about with how it gets easier over time. It's kind of a good reassurance tool a little bit too. But yeah, we really appreciate you guys jumping on tonight. If there's anything else you'd like us to discuss more, we love these webinars. They're like a cool thing where we can get out to lots of people and share some of our knowledge. So just flick us an email and go, hey Adam, you need to talk about this. One of the next things we're going to be doing is next month. I don't know what the date that is, Amber, but we'll post it up on our Facebook page, about if you're looking at building and how to do easy finance for building. So yeah, we're just basically keen to help, guys. So yeah, enjoy the rest of your night, and we'll catch up soon.
Thanks, guys.